Jim Stewart is here, a New York Times columnist and a CNBC contributor. Jim, it's great to see you this morning.
Nice to see you.
You want to talk Reddit first? Or you want to talk a little Warner Brothers Discovery?
Well, let's start with Reddit, since we just heard that excellent analysis from Julia. I think it's an excellent. I like the business model here. It has one of those, highly sought after network effects. As if you want to be in a community like that, you want to go to the place that has the most participants, and that seems to be Reddit at this point. I know there's some competition with Facebook. There are other competitors there, but that's it's a little bit like an auction site. You want to go to the one with the most users, so it has that going for it, and that's an impressive number of users. I think the problem is a little bit like Twitter. It is a almost fully ad-supported operation. They're talking about search revenue in this addressable market. That's huge, but it's absurd they're going to get a major piece of that. Right. And the advertisers are very sensitive to what goes on these platforms. And Reddit for a long time had this kind of Wild West reputation. That was part of its appeal, that you could go on there and say pretty much anything, or find like-minded people to discuss things that nobody in polite society wants to talk about. But that's not what advertisers want. And I hear they've been really trying to crack down on that. But the next time you get a blow up of some hate speech going on Reddit, advertisers are going to run.
Jim, but let me posit two critiques and sort of throw them at you. I'm very curious what you think. One is, company's 19 years old. Still has $90 million in losses. So that's one piece of it. It's not like a Facebook or something else where it's in its infancy still. I think you could argue this is in some ways a mature company. And so how are you supposed to think about that? The other piece, and this goes to, I think, the challenges that you were referring to at Reddit, it's been the challenges at Twitter, but it goes to sort of how big the market is for these businesses, because they're text-based. And even though you and I are in the writing business, most people find writing tough. I find writing tough, by the way. And one of the things that's made an Instagram or a TikTok work so well is video. Video, for better or worse, is a lot easier to create, and therefore you have a lot more people who are just doing it all the time. Coming up with witty or interesting things to say with your fingers, for better or worse, seems to be more complicated for most people.
Well, it would certainly be interesting to know what the demographics are of their users, and I bet it tilts older. I don't think that that coveted teen, early 20s market, for the very reasons you point out, are, well, some of them certainly, we saw in the GameStop thing, some of them are pretty young. I'm not saying they don't use it, but I'm not sure that that's their main demographic audience, for the very reason that you're saying, and whether they could somehow work in a video component. I haven't heard them talk about that. Right. Is that feasible in the future? Maybe. I don't know, but that's way out there. But I agree. The fact that there's a $90 million loss hanging out there after 20 years of operations, that they tried to go public a couple of years ago, that that didn't work out. How much progress have they made since then? It's significant. They have grown, but it's like you say, they're not making money. And this again, does say something about the market.
Can they get to a profit anytime soon? And can they do that by way of these partnerships with Google and others, where they're selling effectively their content to train and be used as inferences for AI, for example?
Well, they're touting the possibilities of AI for their business, and everybody's slapping AI onto everything, hoping to get the NVIDIA halo. But honestly, I don't quite see it. I'm not, I don't purport to be an expert in that. But how AI would dramatically improve they're talking about the search function or it isn't self-evident to me.
I wonder whether AI can help you be a better writer for folks who are trying to bring out ideas, put out ideas on Reddit. Let's pivot for a moment to this Warner Brothers Discovery news this morning. The stock down on the back of the news, about down 5%. As we mentioned, it missed estimates for revenue and profit, but did boost free cash flow. Of course, David Zaslav, the CEO of that company, trying to get that free cash flow number as high as humanly possible so that he can pay down debt. They still have about $44 billion of it. What do you make of these numbers?
Well, I think one important thing to recognize is there's an asterisk over these numbers because of the strikes. And this is the last quarter where you're going to see the benefit from the fact that they couldn't spend. if you look at those numbers, a lot of the improvement came from a decline in costs, and that is not sustainable. Netflix is spending again; they're putting the pedal on, the accelerator. You've got to create new content. It's expensive, and they're not going to benefit from that much longer. So that's something I think people are probably factoring in and should. The other, I think, the really worrisome thing there is the continuing melt in the traditional linear cable channels, and that's still a big chunk of the Warner business. That you're absolutely right that the race is how fast can they reduce the debt at the same time that this ad revenue and subscriber numbers on the linear channels is right. melting away, and that was not a good number.
Well, the question I would ask you is, so he's got two issues that he's trying to solve at the same time. One is he's got to take down that debt number, and at some point you're going to want to try to show that this is some kind of growing business so that you can capture some kind of better multiple. And the question is, right. which do you have to do first? It sounds like right now, David Zaslav has said the first and most important thing, he's being incentivized economically to do it, is to get that debt number down and hope that there's a churn, or I shouldn't say a churn because that sounds like C-H-U-R-N, a turn sometime later in the business. The question is, do you think that there is a turn in the business later, or do you think that requires a deal?
Well, the only growth in there is streaming, and to their credit, they claim that they had a pro forma profit in streaming last year, and that's kind of a landmark. It's impressive. But as I said, the asterisk is they didn't have to spend very much on content thanks to the strikes. So I'm not sure that that's realistic. And the growth in the streaming subscribers is, it's leveling out. It's not continuing to surge. So whether people are going to be looking at, it's considered a feat if you can eke out a teeny profit in streaming now. That is a far cry from thinking that streaming is the new, pot of gold at the end of the rainbow. So I think, investor expectations for the streaming sector, which is the growth area for them, has come way down.